if they revalued it to the market price right now, let's say 3,400, yes, they'd have an extra 800 billion, the Treasury. That would help them. But what it would do, it would put a floor under the gold price, because back in 73, when they revalued it to 42.22, we never saw that price again. And by 1980, the price of gold had gone up to like almost 900. So it would be, even if they revalued it to 3,000, for example, it would be very bullish. I mean, yeah, the U.S. Treasury officially has 8,133 metric tons of gold, and the Federal Reserve has gold certificates um, that are claimed to that gold. And the reason that happened was back in 33 when Roosevelt, when he took in all the gold. He made gold illegal, and people had to hand in their gold and take Federal Reserve notes for it. Uh, all the gold came through the Fed regional banks, and then the Fed regional banks gave the gold to the Treasury, and the Treasury issued these gold certificates. And that was at $20.67. And then in 1934, they came out with the Gold Reserve Act in January 30th, I think, 1934. And that day they revalued gold to $35. And the Fed sent the profit to the Treasury because the gold was taken in at $20.67, and the revaluation, they sent the profit to the account of the Treasury, and they kept those certificates. And then in 1972, after Nixon closed the gold window, the Congress revalued that price from 35 to 38 because the international price of gold was going up, and it didn't make sense to have the price at 35. They revalued it again in 73 at 42.22, and by then gold was almost at 100. So they're always late, but they haven't revalued it since then. So all that gold and the certificates at the Federal Reserve are worth about $11 billion. So if they revalued the gold certificates to, let's say, $3,400, that would be about 800 billion in profit for the Treasury, and they would have to write new certificates for the Fed at 3,400, and the Fed would send the profit to the Treasury, and they could use that to do whatever they want to. So if you revalue it to 15,000, I mean, that's a much bigger number. I think Clive came up, I don't know how much it was. So that's about four times. So it's about 4 trillion. If you do it to 30,000, that's 8 trillion. So they could choose any number. But the thing is about revaluing, and we saw the other day, Alexei, that even the Federal Reserve Board now, on August 1st, they published an article about how this process works, and they'd never done that before. So are they preparing to do a revaluation? I don't know. It's just speculation. But if they revalued it to the market price right now, let's say 3,400, yes, they'd have an extra 800 billion, the Treasury. That would help them. But what it would do, it would put a floor under the gold price, because back in 73, when they revalued it to 42.22, we never saw that price again. And by 1980, the price of gold had gone up to like almost 900. So it would be, even if they revalued it to 3,000, for example, it would be very bullish. They might want to do it a little more than the current market price, maybe because they might want more profits for the Treasury. They might just let the market keep going higher, and then maybe in 6 months to a year announce it let's say at 4,500. Or they could announce it over the weekend at 10,000, and that would basically close down the gold and silver market probably for a week because things would just go crazy. I don't know what would happen, but and that's why I tell people it's better to be early than one day late, and that's why I say, yeah, you need a little bit of physical gold and silver. I agree with you. It's difficult to tell what the repercussions would be for the dollar, but it's been done before. I was reading actually the Fed paper that came out recently. Germany did it in '97. Italy did it. Um, One thing is that a lot of countries now, especially China and Russia, they've been buying a lot of gold. They would do very well as well. So would European countries that have a lot of gold. In terms of the debt, if you look at the debt owed um, to foreigners, treasury debt is about 8 trillion. So that would be that would be how can I say, just over 20%. And even during the 19th century, when there was a gold standard, countries like Britain, they kept like a 33%, 30% gold cover. So yeah, it might not sound that much, 8 trillion out of 37 trillion in debt, but a lot of people argue that uh, the gold cover should be more related to the money supply, i.e. M2, and M2 is around 22 trillion. So eight trillion wouldn't be that bad. I would say it would be like a 40% cover. And when the Fed was created, uh, or back in the 30s, they used to have a 40% cover. Every Federal Reserve note needed to be 40% backed by gold. So I don't think it would be a problem. And I guess if the US did this every 5, 10 years, this revaluation, then yeah, they would lose credibility. But they've waited, if they do it, they would have waited over 50 years. So yeah, what's and the other thing you might say, why you're valuing your most valuable asset at $42 if it's worth so much more. So yeah, it might affect things a bit, but I actually think it would be bullish for everything, for the economy. It won't solve the problem of debt because I still think politicians are addicted to it, but it would buy them time because the bond market is a market that is not followed by the general public. When you listen to the news, financial news, or any news, especially, well, at least here in the UK, they say, the stock market did this and the currency did this, but they never talk about bond yields or anything. So, and what the Treasury is doing is something very technical. So that won't even see the light of day in the mainstream news for the general public. So what they're doing is they are issuing more short-term debt, so that there's not that much pressure on the longer-term interest rates. So they're doing actually what Janet Yellen was doing, and they were critical of Janet Yellen. The other thing they're doing, I saw that they can buy back like existing debt, long-term debt. When they issue short-term debt and they get the cash, they can go in and buy 5 and 10 years debt. And I think they're doing that. Actually, they announced it a couple of weeks ago, the Treasury. So that's how they do it, because right now the Federal Reserve is still doing quantitative tightening. They're still selling their treasuries or letting them roll off without adding them back on. So yeah, they can do it, and they can kind of do a yield curve control, which is usually the something the central bank does. So the other thing with a possible revaluation. Let's say if they revalue to a level where they got, let's say, around 6 trillion or maybe a little less, they could actually go to the Federal Reserve and buy all their almost all their assets, because the Fed's balance sheet is like just under 7 trillion. That they could go and buy 6 trillion worth of it and retire all that debt, treasury debt and mortgage debt, and then the Fed's balance sheet would go back down to like 800 billion, which was where it was before